Hi, my name is Hannah, and today we have our US tax expert Derren. We also have our US real estate and legal expert Jay. We will be discussing US real estate forensic. Hai, nama saya Hannah. Hari ini kami memiliki pakar pajak Amerika Serikat kami Derren. Kami juga memiliki pakar real estate dan hukum Amerika Serikat kami Jay. Dan kami akan membahas forensik real estate Amerika Serikat.
This podcast channel is about you, successful international entrepreneurs, successful expats, successful investors. Sponsored by HCJ.tax.
Hey, we're live. Hi, my name is Hannah, and I'm based in Indonesia. And I'm working in an international tax consultancy. And today we will talk about US real estate forensic, and this episode is about scam, real estate scam. So right now I'm here with two of our experts. So first of all, Derren, would you mind to introduce yourself?
Hi, thanks, Hannah. Hello, everybody. So we're continuing this series. My name is Derren Joseph, and I'm an international tax consultant with a team called Moores Rowland. And my specialty is international tax in general, but U.S. international in particular. Good to be here.
Jay, would you mind to introduce yourself?
Yeah, sure. My name is Jay Knight. Thanks very much for having me again. I am an international real estate investor, and I also am a real estate broker from California. So great to be here. Thank you.
Okay. So in Indonesia itself, the every month payment, like for example, if you take a house or take an apartment, for example, want to buy them by installment. For example, you can pay every month as small as 200 until 500 US dollar. That's cheap, But then again, you need to pay a down payment for 35% from the whole house, or at least 45% from the whole house, which is very expensive, right? So number 8 is emphasis on no down or low down technique. So do you have anything to say about that, Jay?
Okay, yeah. So I mean, first of all, in Indonesia, it is a lot different in the United States because in Indonesia, the banking requirements are very, very strict, and it's very hard for people to get loans. So what the developers will do is they will try to give self-financing, right? So they'll say, okay, hey, you just pay 20% down or whatever it is, and then you can make installments for 5 years with no interest, which is actually not a bad deal, depending on the property, right? Because it allows certain people who may have income that is not maybe as, I wouldn't say not legitimate, but maybe it's just not as transparent, to be able to still be able to buy a house. So because they can't get traditional financing, but and so that's not a bad thing. And I think that in Indonesia, it can work. But in America, they do have a lot of loan programs that people could be eligible for, which offers them low interest low down payments, or certain types of special creative financing that will help them get themselves into a house. But the reality of this is, especially after the financial crisis and the housing crash in 2008 to 2011, a lot of those programs have dried up because what happened was that was a straight correlation into why the financial crisis happened, because so many people got into these houses that they couldn't afford. And maybe, they got into a program where it was 0% down or 5% down, whatever it was, whatever the program was, they just weren't able to afford the payments because of it. So I wouldn't say on its face that a low down payment or 0% down or whatever is necessarily a scam per se, but it is something that you want to have a very, very keen eye towards, because anybody that tries to tell you about a 0% down payment or a low down payment, normally you have to understand that they're targeting the like a certain demographics. They're targeting low income individuals, okay, and trying to make it as a doorstep for them to get into the market to begin with. Okay, and that's not necessarily a bad thing, like I said, but we have to be careful, because the reality of it is that these types of programs most likely lead people to foreclosing on their house eventually, because they just can't make the payments. And so, again, I wouldn't say it's necessarily a red flag, but it's something that I would be cautious of, because these programs are usually not very successful. And that's just a reality. And I know from firsthand experience, I've seen it, I've gone through it, and that's just the reality of the game. So we have to watch what the target market is, and if they're really pushing this kind of low down payment, zero interest, you have to be careful. And especially if they're talking about what's called an ARM, where you have a certain interest rate that is going to be frozen for a certain period of time, but then after that period of time, it'll adjust, and it could adjust, really, really high. And that will make your loan payment, let's just say you were paying, just to use easy numbers, $500 a month, it could jump up to $1,200 or something outrageous. And so these types of programs, most people don't really understand how they work. Mm-hmm. They just get allured into this trap because it means that it's affordable for them to get in, and they're selling them the American dream. But the reality of it is that not only they not be able to make the payments, but the other thing is you have to be careful too, is if it's an income rental property, that if you have this type of program, it's very unlikely that the rental income that you receive is going to be able to cover whatever the mortgage is. Because if you put a low down payment on your mortgage, that means your mortgage is going to be quite high. So, that's the other issue. So again, it's not necessarily a red flag. It's not necessarily something that's illegal, but it is something to be very, very cautious about.
I see. So then, do you have anything to add to that?
Just to support what Jay's already said, that when you come with the low down payment, it's done specifically to target lower income earners. And, when someone is putting together a pitch for lower income earners, surely they do it based on the understanding that these are people who are living hand to mouth already, or they may already be in debt, and you're inviting them to dig themselves into a deeper hole potentially. And that, again, there's nothing wrong with that, but it just seems morally ambiguous that they'll be steering someone in that direction. And we all know that one size cannot fit all. So most businesses fail, and chances are most people would fail with this. Yet you are still pitching to them, knowing that most of them will not be successful. And again, doing it in a way that plays down the risks associated with the project as if it was risk-free. And when you look at it from that perspective, it just seems really unethical. It seems unethical, but again, there's nothing wrong with it. I know there's some lobbying groups in the US that have been calling for regulation. Just like with payday lending, that was another morally ambiguous area of business where, people who are already having a hard time, you're basically enticing them to get into more debt. And to me, this seems analogous with that business model. These are people who have been having a hard time. They're already, doing month to month. And I've seen, situations where people have committed suicide because, they're already on thin ice. Things are already not going well for them and their families. And they went into debt to make this sure thing work, and it didn't work, and they felt a sense of hopelessness, and unfortunately they took their lives. I watched a video last week on it. So again, nothing wrong with it, but especially if you're a lower income earner, just proceed with caution. And if something, as you said it earlier, Hannah, if they keep saying that something is too good to be true and there's no way you could lose, it's a guarantee, it's a sure thing, when we all know there's no such thing as a sure thing, just don't walk, just run away. Don't even walk, run.
Don't walk, run. Like you always say, it's a red flag. Don't walk, run.
Mm-hmm.
Okay.
There's that old saying about a fool and his money will surely part, and it's very true. And the problem is that, going back to what you said, Derren, is that whether it's unethical or not, it's definitely at the very least it's disingenuous. Mm-hmm. And they target these people because they know they don't know much, and they're trying to sell them the American dream. And who doesn't want to live the American dream, right? And so they get into things that are over their head, and they just can't swim anymore. And then, suicide is not that, it's not uncommon, I mean, we saw it a lot. We saw it a lot during the housing crash. So, and the first thing what's that?
Yeah, that's what they think. I mean, if I cannot do anything anymore, why just not be dead?
So who knows what their thinking is? They have a family, and maybe they feel they failed their family, or who knows. But it is unfortunate because they go into these, they target these demographics. They don't know much about real estate, and they sell them this pipe dream, and the first objection is always, well, I don't have enough money to get involved. And so what they do is, hey, no, don't worry about it. We got all kinds of special programs. Like, you don't even have to put any money down, just come to my seminar. You'll learn how to do it. It'll be a snap, and then a year from now, you'll be sitting back in a nice new crib. And, they just sell them this. And unfortunately, like I said, at least it's disingenuous, and oftentimes it probably is very unethical. And that is something that we definitely want to awake people to be able to see through and not get caught in that trap.
Really sad, but it's there. So
please subscribe, like, share, and comment below. Our books and upcoming event are available at htj.tax. Email us at help@htj.tax to engage us, to advise on international tax or business matters.